Hi, and welcome to Crypto Crazy. I'm Cal, and over these last couple of weeks, I've been seeing a lot of videos saying to buy in the dip that we're having currently now. The market cap is gonna push forward for cryptocurrency and smash through 2 trillion. There are some videos that are saying sell and take your profits, and I just wanted to kind of share my take and also my experience of it as well. Now, as you can see from the screen, the market cap, and I'm having a look at this collectively. So the market cap has pretty much gone from as low as 134 billion nearly a year ago and touched about 1.7 trillion US dollars. So that's quite a big increase over that period of time. So, what is the best strategy? Now, there are a lot of people who are speculating what's going to happen next, especially as it's been bouncing around for about a week or so here. So, it's always very difficult to tell what's going to happen. And I think the best strategy is certainly to take some profits. And it very much depends on if that's in line with what you want to do. Now, let me just go back to the last bull market that we had and where prices really surged towards the end of 2017. So I was in heavier around here, got in a lot more, and then the price went up, and then I saw it go back down again because of two reasons really. One, because where I was new to the market, and when it was towards the top and it started going down, there were a lot of experts out there who were sharing their opinion about how it was going to keep on going back up, which obviously it didn't. And they said it was going to be higher. Now, you shouldn't really listen to anyone. It's good to take information in. The more information that you can have is better. But I do think that it's so hard to determine what's going to happen. And I'll also touch upon how easy the market prices do change for coins. And it doesn't take that vast amount in terms of what we see in capital market capital changes. And I'll get onto that just in a minute. So, one, I thought it was going to carry on going up, and two, when it begins to go down, you always do want to recuperate to the point where you are at. And when it is going down, there are expert opinions that are telling you it will recover, and it just slowly goes down. And in actual fact, it went down even further as we saw from there, and it just continued to get, if I just go forward, lower and lower and lower. Now, what I wish I had done, and if I'd had the same level of experience, is when it begins to go up, to start taking some profits. Now, it really does depend on your strategy. So, if you were at the end of 2017 and it was going to be another 3 years until we saw this sort of high runs and hitting new highs, are you okay with leaving your money in there and saying it doesn't matter that it's at a low for 3 years, or for 3 years it doesn't get to new highs? I'm fine with that. Or would you prefer to take some money out to reinvest it elsewhere, to use it if you do need it, and then in the future, if it does go lower, to be able to buy back in? So it really does depend on whether you need that cash and what your longer term strategy is. Because anyone who has 5, 6, 10x even in the last few months will certainly see that that is quite a significant amount of profit. Now, just going back, what I probably should have done is at certain points maybe take a 10% profit. So maybe take it at this stage, and then maybe at this stage, and then maybe I would have got a 10% at the top and then 10% there as well. Now, there are people who might look at it and say, well, if I take it out too early, I'm going to miss out on this high here. Yes, you are, but on the off chance that it would have gone down, you would have at least taken some profits at the top. Now, similarly, if it does go up, you're taking some at the top and you're taking some as it's going down as well. So you're taking some going up, 10% going down as well at certain intervals of points, and the markets do move very, very quickly. But what that's allowing you to do is to almost average it out. So you're not trying to time the top, you're not trying to time a bottom. What you're able to do is average it out. Now, having a look at the price of Bitcoin, for example, now, and we've seen it shoot up a considerable amount in the last few months. And at the moment, it's at pretty much at 48,000, and it's uncertain what's going to happen from this point. But let me just share this with you. So, if the price were to go down to 40,000, now you might think that there has to be a lot of sell-off in the market to do that. It actually doesn't need to be, and I'll explain in a minute. But let me just show you this calculation. So, if that were 40,000 times by the circulating supply, the market cap would drop by 150 billion US dollars. And you may think, well, that's a big sell-off. That's 150 billions worth. Well, actually, it isn't. And let me tell you the reason why. So imagine 90% of this is being held by these big whales, the people who've accumulated more BTC. And the reason why I say that is because that's pretty much what is happening out there. And they're going to hold on. So they're not really going to affect too much. Let's, for example, let's say they don't even buy up when prices drop. They're just going to hold on to what they have. So the remaining 10% of the people globally, like you and I, who have small amounts, who may all of a sudden see that price pressures are going down, people selling up, they want to book some profit maybe, or maybe they're getting spooked that it is too high or it's going to go down, or there's some news out there, whatever the reason may be, because there can be a whole variety of reasons, the price begins to go down, and it'd be the 10%, the individuals who get spooked, who sell off and end up pushing the price down. Now, if we're able to do that and push the price down because the 90% of it didn't really move, then in actual fact, it isn't as big of a sell-off as we think. And what we are tending to see is that the whales are buying up. So as you can see here, it says Bitcoin whale addresses are surging. And in the last year or so, this is nothing to do with the value of it, it's just how many they're actually holding. So the amount that they're holding within the last year, when we've seen it going up, they've been buying more. So it's gone up by 14%. So in that last year of the bull market where prices are going up, these whales are buying more. And because they believe in the long run, they're not going to be selling. They believe in the long run, when it gets to a certain state, they will have a vast amount of money being built up with the pump in price of BTC. So I want to show you this as well. It talks about institutional investors, the whales, and the miners. So some people do have a look at what's happening in the accounts associated with Bitcoin whales, where they have to see a vast amount, and then with miners and so on. And this tweet from Ki Young Zhu will show that institutional investors and the whales are buying, and it's the miners who are selling it, and probably good reason as well. If you are able to mine and to be able to sell a Bitcoin for the value that it is now, they probably want to, and that's probably why they're mining anyway. They want to be able to earn the value of what that Bitcoin is now, especially at such highs. But it just goes to show that these whales and institutional investors are buying up because they want to accumulate that. So I think generally the price will go up. It just goes to show that they want to buy. But what I also do want to let you know as well is that the price is very much changed by a very small percentage as well. Sometimes whales and institutional investors will buy it outside the exchanges. It's a direct from one account to the other for exactly the amount that it is out there. So it will not have that price pressures of going up and down. It's done outside the exchanges. That's a very key point to know. So that you won't see the volume going through the exchanges. You won't see someone putting a demand out there or someone dumping a whole load of Bitcoin out on the on an exchange as well. So just remember why the price is changing, and just remember your strategy too, and what you should be doing. So from this point onwards, if you think it's going to go up, that's great. If it doesn't, are you prepared for it to go back down for another year or two, possibly longer? Maybe it could be shorter, maybe only a few months. But if you don't really know, then you've got to be thinking about your strategy to be able to maximize your profits, even if you still believe in the technology. By keeping in that's great, and if you are in the long term, that's fine. But you're not going to be changing the price too much. So as a result, it's good to benefit from the volatility that comes along with this market. Now, if you were someone who bought up here, then obviously it's not a good point to sell. And you've got to be looking in a much more longer term. There are people out there who are who've got into it and they really are thinking very short term. So they are buying when the price goes up, it starts to begin to go up, and they say, "Oh, it's going up. We'll start buying. It's going to hit 2 trillion." It starts to go down. Oh no, is this the crash? And they sell off, and then it starts to jump back up again. And I'll just put this in a shorter period of time so you can kind of see it, and it starts to go back up again. And they're like, "Oh yeah, it's going to go back up," and then it goes down. They sell again, and what they're doing is they're just booking small losses in what they have within their pot. So they're booking 10% loss here, 7% loss there, 15% loss there, and all they're doing is they're just diminishing what they are holding. So just wanted to share that with you. I think the best option really, if you've accumulated a fair amount of profits, and if it's within your strategy to take some of that, or you want to be able to realize some profits in the next few years, just in case that it does begin to turn down. And I'm not saying it definitely will. It's obviously you have to have a risk-based approach. And if that's the case, then if you've got, I don't know, 100, let's say for example, $100 in there, you take 10% and you've booked in $10. And then when you book your next 10%, you're actually booking $9 because you're doing it of that amount. So there are people out there who might think, well, if I just take 10 slices, I won't have anything left in there. But what you're doing is just taking 10% of that amount. And if it does go up, and let's say it doubles in value, then it goes up to 200, then you're taking 10%, you're taking 20 of that. But what you're able to do is just constantly have that income coming out from it. And if it does go down and it hits absolute lows, and let's say Bitcoin goes back down to near, let's say, lows of what it was before, even if not, even if 10, 20,000, and it stays there for a little while, then it's a possibility to accumulate more, or any coin really that you're interested, whether it's Cardano, Dot, Ether, or some of the smaller projects from there as well. So just wanted to share that with you, my experience, my thoughts. And again, this isn't advice. It really does depend on what your circumstances are, what your goals are, what your strategy is. But it's good to have that additional information too. So hopefully that's been useful. As I always say, if you do like it, please do give me a like. It does help my channel. And I'll see you in the next one. Bye.